Picture this. While much of the world is still debating whether the office is dead, a bold move has quietly, decisively, and at scale rewritten the narrative. In the heart of Miami, where culture, capital, and ambition collide, a single deal sent a clear message to global markets. This city isn't slowing down, and neither are the investors who truly understand power, timing, and long-term value. What's unfolding here isn't just a real estate transaction. It's a signal. A signal about confidence, about conviction, and about who is willing to step forward when others hesitate. Stay with me, because this move reveals far more than square footage. This moment is about far more than a single transaction. It's about conviction. At a time when many are questioning the future of office real estate, when hesitation has become fashionable and caution is mistaken for wisdom, this acquisition sends a very different signal. It says that long-term value is still created by leaning into fundamentals, by understanding cities that are growing, and by investing where talent, culture, and capital are converging. Miami is not a speculative bet. It is a calculated decision grounded in data, demographics, and momentum. The partnership behind this acquisition reflects that philosophy. Capital alone does not build enduring assets. It must be paired with local expertise, disciplined execution, and a clear strategic horizon. That is exactly what this collaboration represents. One side brings deep financial strength and a long-term investment mindset. The other brings decades of experience shaping neighborhoods, understanding Miami's unique character, and turning locations into destinations. When those strengths align, the result is not just ownership of a building, but stewardship of a district's next phase of growth. The Wynwood office acquisition stands at the center of a neighborhood that has already proven its ability to reinvent itself. Once defined purely by art and creativity, it has evolved into a magnet for companies that value talent density, lifestyle integration, and authenticity. This building sits where culture meets commerce. It offers modern office infrastructure in an environment that attracts innovators, entrepreneurs, and global firms looking for more than a traditional central business district. That positioning is not accidental. It is precisely why this asset matters. This deal is also a statement about scale and seriousness. A transaction of this size reflects confidence not just in the property itself, but in Miami's trajectory as a global business hub. Companies are relocating decision makers here. Capital is following people. Infrastructure, from transportation to residential development, is expanding to support that influx. In that context, acquiring a flagship office asset is not a short-term trade. It is a long-duration investment aligned with how and where the next generation of leaders wants to work. Equally important is what this partnership signals to the market. It reinforces that well-located, high-quality office space still commands demand when it is integrated into vibrant mixed-use neighborhoods. It challenges the narrative that offices are obsolete by demonstrating that the right offices in the right places remain essential. People still collaborate, ideas still benefit from proximity, and cities that offer energy, diversity, and opportunity continue to win. Ultimately, this acquisition reflects a broader belief: capital should be deployed with purpose. It should strengthen cities, support economic ecosystems, and create environments where businesses and communities thrive together. Wynwood represents that opportunity. This partnership recognizes it, invests in it, and commits to its future. That is not just a real estate decision. It is a strategic one, grounded in confidence, discipline, and a clear vision of what comes next. Markets are always speaking. The challenge is knowing when to listen and when to act. Miami's office market has been sending a clear signal for years, and this acquisition is a response grounded in that reality. While national headlines focus on vacancy rates in legacy downtowns, they often miss what's happening in cities that are gaining population, attracting capital, and redefining how people live and work. Miami stands apart because it is not trying to revive an old model. It is building a new one in real time. The strength of this market lies in its fundamentals. Population growth has been consistent, driven by professionals and entrepreneurs who bring both income and ambition. Businesses are following that talent, not the other way around. When decision makers move, headquarters, capital allocation, and long-term commitments tend to follow. Office demand in this environment is not theoretical. It is practical, purposeful, and anchored in daily economic activity. That is why well-located assets in dynamic neighborhoods continue to outperform. Wynwood, in particular, represents a shift in how office space is valued. This is not a traditional financial district defined by glass towers and rigid routines. It is a district defined by energy, creativity, and walkability. Companies here are not just leasing square footage, they are buying into an ecosystem. Employees want to be in places that inspire them, where work blends naturally with culture, dining, and community. Office buildings that recognize and support that lifestyle become magnets for high-quality tenants. This acquisition reflects confidence in that evolution. It recognizes that office space is no longer a commodity. It is a product, design, location, and integration with the surrounding neighborhood matter more than ever. Assets that fail to adapt will struggle. Assets that align with how people actually work and live will thrive. Miami has embraced that reality faster than most markets, and Wynwood is one of the clearest examples of that progress. There is also a broader economic lens at play. Miami is increasingly a gateway city, not just regionally, but globally. It connects North America, Latin America, and beyond. That international relevance brings resilience. Capital flows here from multiple directions. Industries are diversified, ranging from finance and technology to media, healthcare, and logistics. An office market supported by such diversity is inherently more durable. The decision to invest here is ultimately about risk management as much as opportunity. True risk is not investing during uncertainty. True risk is ignoring structural change. The shift of talent and capital toward Miami is not cyclical, it is structural. Office assets positioned at the center of that shift stand to benefit over the long term. This transaction signals belief in the city's momentum and in the office market's ability to evolve rather than disappear. Miami is not waiting for the future of work to arrive. It is actively shaping it. And investments aligned with that direction are not chasing a trend. They are recognizing a reality that is already unfolding. Transformation is rarely linear, and Wynwood is proof of that. What began as an overlooked industrial pocket evolved into a global arts destination, and now it is entering its next phase as a serious center for business and innovation. That evolution didn't happen by accident. It happened because the neighborhood attracted people willing to take risks, challenge conventions, and build something authentic rather than manufactured. Investing here is an acknowledgement of that history and a belief in where it is going next. Wynwood's strength lies in its identity. It never tried to imitate another district. And that authenticity is exactly what has drawn talent, entrepreneurs, and forward-thinking companies. In today's economy, culture is not a side benefit, it is a competitive advantage. People choose where to live and work based on quality of life as much as compensation. Neighborhoods that offer creativity, diversity, and energy consistently outperform those that rely solely on tradition. Wynwood delivers that in a way few places can. The office asset at the center of this acquisition sits within that cultural fabric. It is not isolated from its surroundings, it is integrated into them. Employees walk out of meetings into restaurants, galleries, and public spaces. That environment fosters collaboration, attracts high-caliber teams, and strengthens tenant retention. In an era where companies are selective about how much space they occupy, buildings that enhance productivity and experience gain an edge. This evolution also reflects a broader shift in urban and development. The most successful cities are no longer built around single-use districts. They thrive on mixed-use environments where work, living, and culture intersect. Wynwood has embraced that model, and the results are visible in its leasing activity, foot traffic, and continued investment. Office demand here is supported not by nostalgia, but by alignment with how modern businesses operate. There is discipline behind this confidence. Investing in an evolving neighborhood requires careful analysis, patience, and respect for what made it successful in the first place. Growth that ignores character ultimately destroys value. Growth that builds on identity creates it. The approach here is not to overwrite Wynwood's story, but to contribute to it thoughtfully, ensuring that commercial expansion complements the creative core rather than displacing it. From a strategic perspective, Wynwood represents optionality. As the district matures, its relevance expands. Office, retail, hospitality, and residential uses reinforce one another, creating resilience across economic cycles. Assets positioned at that intersection benefit from multiple demand drivers, not just one. That diversity strengthens long-term performance and reduces dependence on any single industry or tenant profile. Ultimately, this investment reflects a belief that cities are living systems. They evolve through collaboration between capital, culture, and community. Wynwood has demonstrated its ability to adapt without losing its soul. Supporting its next chapter is not simply a financial decision. It is a commitment to a model of urban growth that values creativity, inclusivity, and long-term vision. That is where enduring value is created, and that is why this district matters now more than ever. Great investments are rarely about doing everything yourself. They are about knowing where your strengths end and where the right partner's strengths begin. This acquisition reflects that understanding. It is built on the idea that capital and local expertise, when aligned, create outcomes neither could achieve alone. In real estate especially, the quality of execution over time matters as much as the initial purchase. Buildings succeed or fail based on how they are managed, positioned, and evolved alongside their surroundings. A strong partnership brings discipline to ambition. Financial backing provides stability, scale, and patience. Local stewardship provides insight into zoning, tenant behavior, neighborhood dynamics, and cultural nuance. Together, they allow decisions to be made with clarity rather than haste. This is not about short-term optimization. It is about long-term relevance. Assets that endure are those guided by people who understand both the balance sheet and the street. Miami is a market where that balance is essential. It is diverse, fast-moving, and deeply influenced by its neighborhoods. What works in one district may fail in another. Local knowledge shapes Eve, writhing from tenant mix to design choices and community engagement. When that knowledge is embedded in asset management, it protects value and enhances upside. This partnership ensures that decisions are grounded in reality, not abstraction. The structure of this collaboration also reflects a broader investment philosophy. Capital is most effective when it empowers operators who know their market intimately, providing the majority of the equity while entrusting day-to-day stewardship to experienced local hands creates accountability and alignment. Each party focuses on what it does best. That clarity of roles reduces friction and increases the likelihood of long-term success. This approach is particularly important in an evolving office market. Tenant expectations are changing. Flexibility, amenities, sustainability, and integration with the surrounding neighborhood are no longer optional. They are baseline requirements. Meeting those expectations requires constant engagement with tenants and an ability to adapt quickly. Local asset management is not a convenience, it is a competitive advantage. There is also a reputational dimension to this partnership. Real estate investments leave a lasting footprint on communities. Responsible ownership means contributing positively to the urban fabric, not just extracting value from it. When partners share that perspective, the asset benefits from goodwill, stronger tenant relationships, and community support. Those intangible factors often translate into very tangible returns over time. From a strategic standpoint, this collaboration sets a framework for future growth. Successful partnerships tend to repeat themselves. When trust is established and performance aligns with expectations, opportunities expand. Miami's continued growth will present new chances to invest, develop, and reposition assets. A proven partnership provides the foundation to pursue those opportunities with confidence and speed. Ultimately, this acquisition is a reminder that leadership is about alignment, aligning capital with expertise, aligning strategy with execution, aligning ambition with responsibility. When those elements come together, investments become more than transactions. They become platforms for sustained value creation, benefiting investors, tenants, and the city itself. That is the kind of outcome this partnership is designed to deliver, and that is why it matters far beyond a single building. Every major investment should answer a simple question: what does this look like 10 and 20 years from now? This acquisition is rooted in that long view. It is not a reaction to short-term market noise or cyclical sentiment. It is a deliberate step aligned with where people are moving, how businesses are evolving, and which cities are positioning themselves for sustained relevance. Miami has crossed that threshold. It is no longer an emerging story. It is an established one, still early in its growth curve. The long-term trajectory of this city is supported by fundamentals that compound over time. Population inflows bring talent. Talent attracts companies. Companies generate demand for office space, housing, and services. That cycle reinforces itself. When investments are placed at the center of that momentum, they benefit from both growth and resilience. This is why patience matters. Value is not created by timing headlines. It is created by understanding direction. This investment also reflects confidence in the enduring role of physical space. Despite advances in technology and flexibility in work patterns, collaboration, culture, and leadership still thrive in shared environments. Offices are no longer just places to sit. They are tools for alignment, innovation, and identity. Assets that support those functions will remain essential. The future belongs to buildings that people choose to be in, not ones they are forced to occupy. Looking ahead, the significance of this acquisition extends beyond its walls. It contributes to shaping how Miami grows. Thoughtful office development supports daytime activity, local businesses, and infrastructure investment. It strengthens neighborhoods by bringing consistent economic energy rather than sporadic bursts. Over time, that stability attracts further investment and raises standards across the market. This is how districts mature without losing their vitality. There is also a broader lesson here about leadership in uncertain times. When markets are unsettled, the instinct is often to wait. But progress is rarely made by standing still. It is made by those willing to act with discipline and conviction. Long-term investors accept volatility as the price of opportunity. They focus on fundamentals, not fear. This acquisition reflects that mindset clearly. The real measure of success will not be a quarterly report or a short-term valuation. It will be the quality of tenants attracted, the strength of the community around the asset, and the relevance of the building years from now. Enduring value shows up quietly through consistent demand, strong relationships, and adaptability to change. Those outcomes are intentionally built, not accidental. In the end, this investment is about responsibility as much as return. Capital shapes cities. The choices made today influence how people work, connect, and build their futures tomorrow. Taking a long-term view means embracing that responsibility and acting with care, confidence, and clarity. That is the philosophy behind this acquisition, and it is why it represents not just a confident move in Miami's office market, but a belief in the city's future and its role on the global stage. And this is the moment that matters most. When the noise fades, when the headlines move on, and when short-term doubts are forgotten. What remains are the decisions that were made with clarity and courage. This move wasn't about chasing attention. It was about shaping the future while others were still arguing about the past. Miami is rising, Wynwood is evolving, and the players who understand that shift are already in position. History doesn't remember hesitation. It remembers who saw the moment, seized it, and built something lasting. And make no mistake, this is one of those moments.